Hello, everybody. I'm excited about this one. Big thank you out there. I see you, Jeff Hammer and Beardy and people staying up late. We have the man, the mystery, the legend, Mr. Ken Standfield. How are you, sir? And
Hello,
live.
James.
Yeah. You said you've never presented like your persona live before on YouTube, correct? First time?
Correct.
We are very honored to have you. And we have a lot of
Thank you.
stuff to talk about. So let's get the housekeeping stuff out of the way first. And apologies to everybody in Europe who's staying up late. Hello, Team Australia. Below in the contents, you'll see all the things you need to do to subscribe to Ken's channel. And Ken is an extremely good person, kind, generous soul, and very experienced. So before we jump in, we're going to talk about a lot of stuff today. We're going to talk about Bitcoin and what it's doing and what you foresee for the future, what your charts tell you. We're going to talk about crypto. We're going to talk about trading. We're going to talk about volatility. We're going to talk about TA especially. You know, does it work? And can everybody be successful and what it takes to be successful? A little bit on the psychology and mentality, which is an area very near and dear to my heart because this can really damage the psyche. And you need to have a strong mind to be able to deal with the undulations in the market. I'm going to talk about trading, your methods, success, which is very important, what it takes to be successful as well, which kind of ties into the psyche, and a little bit on macro, and then a wrap up. So hopefully we can knock this out in an hour, especially for the team in Europe, for staying late. So, you ready to go?
Ready to go.
By the way, you remind me of Michael Saylor with that ship in the background. So you guys might be kindred spirits. And you also caught me on a fasting day with no coffee. So I'm caffeine free without any nutrition. So I'm running on steam here. But the market is taking a lot of people by surprise. Let's talk big sector. A lot of people expect the sky to fall. But there's certain things that just happen in the world. There is a huge amount of liquidity. Everybody seems to be myopically focused on the United States market and everything else. But technology is what matters. Disruption is what matters. That's what I'm primarily focused on because we are going into an exponential time that it's very difficult for the linear mind of a human to understand. We saw, basically S&P 500 is back up at 4,200. Tech has gone crazy. The valuation of companies like Nvidia is through the roof. Dollar is up. Gold is up. Crude oil and Bitcoin declined, but then Bitcoin bounced back once the US market closed because people want to trade 24/7. US 10-year Treasury is 3.6. And there's a ton of liquidity globally in the market, which is driving all risk assets up. And that's what people don't understand. We know the debt ceiling will be solved. But what's your quick take on the market right now before we jump into some Bitcoin specific stuff?
Yeah, sure, James. Well, the US market is definitely very interesting right now. We had a huge spike in the DXY, yields came up, and the Nasdaq rallied. Very, very interesting. And the VIX just spiked down. And if we we zoom out a little bit, we've got the banking crisis. We've had a lot of problems. The fiat on-ramps and off-ramps of Binance in Australia were just closed. The Pay ID from Westpac, they pulled the rug on that, and that's very, very interesting. From the macro perspective, there's a lot of stuff happening. And I'm just thinking if I can share my screen,
Please do.
we didn't get that button there.
The button didn't show up?
No, it didn't show up.
Uh, hmm. Look at the top in the middle of the screen and hit the button share screen. Can you see that at the top?
It's not there, my friend.
Uh,
It's not there. It's the same
anyway,
as before.
talk to us. Maybe I can pull it up from my end for you. Oh.
Okay, okay. If we think about what's happening in the US markets at the moment, there's a lot of stuff that okay. I'm trying to show the KS model, so I don't know if you can pull that one up.
Uh, no, but this got
Uh,
to. I just can't see from
yeah.
your side. Let me see. There's like I've had people I have people on this all the time. They just hit share as
Yes,
native. Maybe it's the Windows doesn't allow you to do that. Windows machine.
it could be.
I'm not sure. But anyway, let's just walk through it and talk to it
Yeah.
as we go forward.
Okay. So the US market is going through a lot of trauma with Fed raising rates as aggressively as it has to crush inflation, and they've ended up crushing everything as well. So that caused the banking crisis, the run on the banks. There's a lot of risk inside the system that they're afraid. There's people leaving markets. There's a lot of liquidity that is institutionally that's been pulled out. It's gone up in money market funds, and that's good. But the issue is that they're concerned. They're on the edge. People are talking about GFC 2023, which is going to be worse than 2008 and 2009, and there's there's so many that are making people afraid at the moment. But
Mhm.
as traders, we and investors, we love volatility. If you look at Warren Buffett, he says you buy when the blood is in the street.
Exactly.
And yeah, a lot of people kind of miss that point that when the markets are tanking, there's so much opportunity there. And any red day from our community side, we just love the red. When it's selling off, we borsog, which is buy on red, sell on green, rule 621. So we look at it and we love it. It's the best.
Yeah, and it's funny because if you look at even just the volatility intraday of Bitcoin right now, let me see if I can pop
Yeah.
this up. I don't know if this will work, but just the crazy amount of undulations is just insane. Up, down, kind of like maybe like your buy on red, sell on green type of
Yeah.
process. Let me turn the cameras back on.
Yes.
I mean, it's just if you have the ability, we'll talk about scalping and trading methods later, but when you can time, buying the dip, selling the top, buying the dip, and it takes a lot of courage to do that. But literally,
It does.
you can add $500 every couple of hours, like clockwork. And a lot of it is
Yeah.
actually, I believe, manually manipulated by other market players that we may not be aware of behind the scenes, and
Yeah.
that's kind of a big scary part here too, that the audience needs to be aware of too. So let's jump in. That's kind of where the market's going. Volatility is your friend. We'll talk more about VIX later, as I call it. We'll go back to Bitcoin, and some of the questions I have is when I told the community we were going to be talking to you, they're very interested in one. And one I wasn't aware of was your model predicted a Bitcoin top in May 2022 of 400K plus. But of course,
Yeah.
we were all crippled by black swans time after time. It was raining black swans. And
It was.
so a lot of people fell short. I was actually one of the most conservative people out there saying, maybe I think it was like $8,000 ETH and 89K Bitcoin was kind of where I thought we could go. We got to 69, so we weren't far away distance wise. But forgetting the past, there's a couple of things that make up the market this time that I think are very different. One, we have people are very nervous with the ledger scare yesterday and the day before. People are now worried about cold storage, and they don't trust exchanges. There's very little out there on the exchanges. I'm working on a new, what I call Bitcoin lost video, which calculates exactly how many Bitcoin are lost and how many are actually there.
Fantastic.
And the result is quite terrifying. But in terms of this cycle, what do you believe the top could potentially be based on your models, even rolling
Sure.
last year's before?
Yeah.
But
Oh, I wish I could share my screen.
there's got to be a way. Let me see. There is a share button, and I know there's a share button. I just can't see where it is. It'll be somewhere very obvious in front of you. Can you flip a camera?
Hang on a tick. I'll show you something. We're doing live debugging. On. I'll show you. I'll show you what I see. This is crazy, but that's what I see. So there's no share button.
That one at the bottom that goes up, maybe. That will
Let's
do
have
it.
a look. That little cog? No, it's not the cog. The
Or
up and down. Oh, what a shame. Uh,
Let me see how else we can do this. There is a share button.
I,
Sabertooth Tiger in Australia. It's Ecamm Live. We have somebody in the audience who'll help us.
ooh, thank
Yeah,
you.
Ecamm Live is the software. Where
You can live, yeah.
is share button on Windows at Cybertooth? See, by the way, interesting story. I ran some numbers ahead of this because I was interested in kind of my audience and the breakdown. Why? Why are so many people in Australia obsessed with crypto? Ken, answer me that, because I
We
calculated,
love it.
yeah, all of the views since I began my channel 2 years ago.
Hang on. Sorry,
All of
I'm
the
fighting with my microphone here.
Yeah, and that's
That's all
all.
I see.
Wow, that's weird. There must be another
Yeah.
interface or something. There should just be a big pop share button at the bottom or in the middle. Anyhow, but
Uh,
in terms of what I did was I looked at the total views by Australia, and the total population of Australia is 25.703 million people, and I calculated a ratio. It's
yeah.
17%, which is 30% higher than the next highest country, which is Singapore, then New Zealand, then
Yeah.
Ireland. Then it's Canada, then UK, US. But why are Australians and Kiwis so obsessed with crypto?
Aussies are very, very creative. We're a completely innovative race. We look at things and we're very anti-establishment. We look at things and we say, we don't really want to do that. We don't define ourselves narrowly, so we adopt and we pioneer. Uh, when you look at Hollywood, at one stage it was called Aussiewood because the Aussies just they're off invading different things and different areas. They're amazing people, just amazing people. They're in.
By the way, I think we have the solution from Benny out there.
Oh,
Benny is
oh,
in the
Benny,
Netherlands. You got to hit the Windows
Benny's
button.
awesome.
Yeah. Oh, you know
Yeah,
Benny. Windows button
yeah.
plus S, and that's the share
Windows
hotkey.
button plus
I hope that works.
Windows button
Plus
and S.
at the same time. That should be the share
Hang on.
hotkey.
Windows
Or
button plus.
Windows button
Hang
plus
on.
arrow up.
Ah, that's better. Plus arrow up. That didn't work.
And it says show camera switcher.
We're having so much fun, aren't we?
Yeah. Or
So many charts to share.
try arrow up for this. And I thank everybody for being so patient. I've never had a problem with this before, but it could be a Windows situation. What we
I
could
think
also
it
do,
is.
yeah.
No, Windows key didn't work.
I have another
Oh,
idea.
yeah.
I can set up a Zoom, send you the Zoom link. You share your screen on Zoom, and I'll share the Zoom picture.
Okay.
That
Yeah,
way we
we can
don't
do
interrupt
that.
the feed. Okay.
Oh,
So,
sorry, everyone.
no, no. Well, let me. Well, so we don't waste the audience's time. I'm going to go to.
Yep.
We're going to start talking about questions. So we don't have your picture yet of where you believe the top of the cycle could be for Bitcoin
Oh, yeah.
this time
Okay.
around. But I'm going to ask you two questions. You can talk to them, and then I'll set up the Zoom link. One is
Yep.
when do you think we could hit the new all-time high? Would that be
Yep.
before the halving or after? And how high could we go this cycle? That's what everybody wants to know.
Okay. Yep. Thank you, James. Okay. So the halving is around the 7th of April, 2024. So if we look at that, yeah. So if we think about that before the halving, we typically get a move up and based on past price action, I think we could be looking at around 50,000 roughly in towards the end of 24. Now that's reasonably conservative and we've had a lot of black swans. That's the positive case. But if we get just blitzed by black swans, if things go the other way, it is possible for us to move down to 10. And one of the things that we do inside the crypto trading KS family, we have a three-dimensional risk management. Three-dimensional risk management is all about saying we need to think about the down case, we need to think about the neutral case, and we need to think about the up case. So we always do three-dimensional every single day on the channel. We're always looking at what we need to do. We look for the all-time high. It's very unlikely that it's going to come before the halving. The halving reduces the supply, and it's most likely to squeeze after the halving. I've got a kind of conservative target on there for around the 2nd of October 2025, around the 150. But we also have to think there's a price range that we're in all likelihood going to move between. I'm thinking a low around 16 and a half if we get blissed by multiple black swans. If a war breaks out between China and Taiwan, which pulls the world in, if a new pandemic, and they're talking about a bat virus out of China just on the Wall Street Journal,
That's very
made
great.
the front
Never
page.
heard of that before.
Yeah, just whoa.
Yeah. By the way, I emailed you the Zoom link if you want to share something.
Oh, thank you, James.
Walk us through this chart.
Sure. Okay, if we look to the halving, so the halving is around the 7th of April 2024. And if we think about what is a halving, it's just the reduce of the supply in Bitcoin. And I know you talk about it all the time.
Yep.
So that is going to create a shock inside the system where Bitcoin will become more scarce. So we would expect an all-time high after the halving and not before. And that's what we see traditionally in periods of consolidation. Like if we go back the past cycle, this is what we tend to see. And if we look at what the price performance has been, and of course, what's happened in the past doesn't mean it's going to happen in the future, but we see during that consolidation period leading up to the halving, we almost take out the previous, we're just a little bit below the previous highs, but it does come up. So if we look at that and just dilute it a bit, and if it follows the same kind of pattern, we're probably heading around the 50,000. And the thing to bear in mind is that we have an absolute mass of black swans that could happen if we have the China-Taiwan war. And I think that would be a semiconductor play on China's part because it was frozen out of the chip market by the US because all of those things that are going on between countries. Taiwan has all the advanced military chips, and it's essential if you think about AI, how AI is taking over the world. And Taiwan has 60% of the world's market as well. So if China takes over Taiwan, and of course the Chinese talk about reunification, and it's a politically and emotionally charged issue. But I kind of, at my age, I look a little bit beyond that and say, what is the implication if that happens? And the semiconductor market would be owned by China, which would have tremendous impact on the US, tremendous impact on Europe. If North Korea and South Korea start a war and Japan gets pulled into it and US gets pulled into it, then we're going to see Russia get pulled in, aligning with China, North Korea aligning with China. It could be a bit of a problem. So we always have to consider that the downside impact could happen, but if it does, there's areas of deep value that we actually want to participate in. We can't avoid any of these things. So it's not a question of that. It's more a question of, okay, these things can happen. How do I prepare? How do I get psychologically prepared for that? Don't just take the upside, but take the range of values and think about what your strategy would be if things didn't work out. I think that's a really good idea. And probably 150,000 heading towards maybe around the 2nd of October 2025. So does that help to answer your question there, James?
Yeah, it does. And talking about the war, do you have more stuff to show, or should we just go to looking at ourselves?
You can keep on going. Yeah.
We can flip back to us.
Yep.
And then we can. Oh, now we know how to share screens, which is great. Okay, let's talk liquidity. I'm obsessed with liquidity, looking at how much money is sloshing around on planet Earth. That
Yep.
drives up asset values. We know what happens with war.
Mhm.
Printing happens like there's
Yeah.
no tomorrow. The only time
Yeah.
money
Correct.
printing has been higher than C19, I don't want to say the other word, was World War II in the United States.
Mm.
So,
Mm.
but because of increasing deficits, I reckon the deficit will be over 2 trillion this year. The debt
Yeah.
ceiling will be raised. They're already 300 billion, 400 billion above the debt ceiling as it is right now. So a
Yeah.
ton of bond issuance is coming our way. You got a
Mm.
liquidity chart. Should we pop that up
Mm.
now that we know
Yeah.
how?
Please.
There you go. Liquidity and market correlation. So if there is a war, people think,
Yeah.
oh, I'm just going to move to cash and hide in a cave and hope everything will be okay. But
Mm.
normally, if you look at the performance of risk assets and stock markets, etc., during wars, it's not the
Yeah.
end of the world. And I'm hoping smarter
No,
minds will
absolutely.
prevail and they'll negotiate something. And I've got my own point of view on China and Taiwan.
Mm.
And the West shouldn't meddle. Let them figure it out. But anyway, that's a separate issue.
Yeah.
Talk to us about liquidity and market correlation.
Okay. Yeah. If we look at the recent liquidity, institutional liquidity has been coming out of the market, and we also see a lot of individual liquidity coming out as well. And this is just what happens inside markets. If we look at the S&P 500 and we go back to 2009 with Bitcoin, so Bitcoin is the back chart and the line is the S&P 500. When we have these liquidity shocks, we have these pullbacks in markets. And I often say to people, the bottom of a bear market is hammered in when they run out of sellers, and any particular bad news can shock the market up. So it's not something to be concerned about, it's something to participate in. If you went back a couple of cycles and we saw the S&P 500 starting to roll over, starting to top there, and if we look at 17 when the S&P 500 came down, the liquidity came out, just kind of like what's happening now. It's all going to surge back in at some stage. And it's all about, well, how do we position ourselves to take advantage of this? It's like you say, James, we don't run away from the market, we run into the market like firefighters.
Exactly. This one here, I've looked at the correlation between liquidity and the QQQ, which is the NASDAQ 100.
Yeah.
There is like 93, 94% correlation, the price. So
Mm.
liquidity goes up, 94% of the price action on the NASDAQ is explained by that. And that's global liquidity, not just US
Mm.
liquidity. Are you seeing that same type of correlation with the S&P 500
Yeah.
here too? Yep.
Oh, it's always playing in. And if we look at central bank balance sheets and we look at what's happening, have you looked at China's central bank balance sheet,
Yes,
James?
it's 4x. They've got 400% debt to GDP,
Yeah,
and a lot of it is hidden. It's kind of funny.
it
They
is.
got a serious currency problem, but hey,
Yeah.
maybe they can outgrow it. But that's common.
They
I wouldn't want to peg my currency to the yuan. Put it that way
no,
to go
no.
forward.
For a lot of different reasons, I think it's certainly not there yet. But there, we've got a diversion. We've got two groups in global markets. So
And a reminder to everybody: the reason we are here, people like Ken and I, is to help people get some hard assets that cannot be debased, because every
yeah,
and anything under the sun will cause governments to print more fiat. People in Canada are aware of that. People in the US are now aware. People in the UK, Australia, New
mm,
Zealand,
mm,
etc. It's like the secret's out. The
yeah,
whole theft by inflation is now commonly known, and that's probably why those
yeah,
countries are that do not trust the government become much bigger fans of things like Bitcoin.
yes.
Where are we going next on these charts, or can I pop a few more
Oh,
questions your way?
yeah. I was just one thing that you said that really, really resonates with me. If we think about the volatility inside, and this is Bitcoin. Look
Yep.
at the volatility from the high to the low and measuring from the low to the high. It's extreme. And when we look at Bitcoin's performance and how it goes up and down, if you know how to manage your emotion, first of all, because it's so emotional. If we think about when all the crises hit the China miner crisis hit, that was the ultimate time to get in. And if we look at FTX and we look at the banking crisis, all of these kind of things are really, really profitable if we look back. But when we're in it, it's like a horror show.
Yep.
So the question is always, how do you buy on red and hold the line? It's very, very difficult to do.
Yep, exactly. And sometimes one of the things I've noticed as well in the market psyche, there are things that are kind of new. You have a thing called FinTwit, where a lot of people get their financial advice on Twitter. And
Ooh, bad.
the vast majority of the sentiment is vastly incorrect or overly bearish, etc. Even if you look at Wall Street, Wall Street is
Yep.
extremely short the S&P 500 and has been since 3,800. Now it's at 4,200, and they're just pulling their hair out saying, what's going on? This is just unsustainable. So,
Yeah.
good. So we covered that. We covered, what about, you mentioned Westpac. I know it's one of the biggest banks in Australia. They shut off the on-ramp, kind of like many of the other banks around the world. What do you think of regulators trying to impact crypto adoption, trying to choke out crypto from the people? Is that a thing that you see in Australia too, obviously?
Actually, James, this is a really interesting story. The answer is yes, I see it. I started an internet service provider in 1993. So that was a year before the Netscape browser was released to the public.
Early.
That was a very long time ago. And that grew and it supplied major corporations and celebrities and all sorts of it was a very interesting time. And the government did everything they could to kill the internet. Everything. And
Well,
if we think right now, I bring this up a lot inside my global family, my community. When the horse and buggy, this looks crazy, doesn't it? When the horse and buggy was the dominant form of transportation and these newfangled things called cars came along, people just didn't know what to do with it. So, but the automobile was adopted and it took a while to reach mass adoption. And if we think the internet and what is crypto, it's the internet of value. And if we think about adoption curves throughout all the different technologies, crypto is just on an adoption curve. And the regulators have a big problem. This is a 2020 look at the money supply 3 years ago. So 3 years ago, 7% of the of the money supply was physical. What does that mean? If there was a run on banks, they could redeem 7%. Just
and that's
like let
gone.
that
Yeah.
sink in. It's crazy. That's 3 years ago, and the central bank liquidity has gone through the roof. So the banking system runs on the credit creation multiplier, which is they get $100 in deposits, they loan 90 out, goes back into the financial system, they have to keep 10% reserves. So they keep on loaning out. But this is predicated on the fact that the banks own the financial system. When you've got crypto, this 90 is bled out of the financial system. And what happens when people want to take their fiat, transfer it to an exchange, and it doesn't exist? It's very interesting. Or they want to withdraw their money. So Silicon Valley Bank and Signature Bank and all of that gives a really good indication of that. And so that's actually driving central bank digital currencies because all the governments know that they have to develop and release central bank digital currencies. And the world is just in different facets of development when it comes to that.
Oh yeah, they're coming.
So
No buts. Yep. That's the only way they will be able to control not only the
Correct.
the people, but also the monetary system. And that is kind of get away from this
Exactly.
paper based money. And also, obviously, those who misbehave. A lot of people in different places of the world think, oh, well, they might control people in China by throttling their wallet, but they'd never do that in the US or in Australia or other places.
They
Have you
will.
have you seen what
They
happened
will.
in the last 2 years around the world? So that's the funny thing. People need that kind of cold shower to wake up and understand what's coming and how scary it really, really is. So this is definitely very scary. Let's move
It,
forward because we did promise
yeah.
people a lot of cool TA stuff and we know what's coming. Let's talk crypto and volatility. I think you once said in
Mm.
one of your videos, crypto has 35% volatility per month, i.e., for those in the audience, volatility is kind of price variability. So if you imagine something is $100, 35% volatility means it can go to 135, maybe down to $65 in the space of 30 days and go back.
Yeah.
Typically,
Yeah.
stocks range about 5% a month, so it's a lot
Yeah.
less. But talk to us about how volatility is your friend in the crypto space and how
Yeah.
you.
Mm. Well, if we think about volatility, volatility is never your friend if you're unprepared. If we think about any down play in price, if we're not psychologically prepared for it, we have a lot of problems because we can't actually take advantage of it. So that's why inside our community, we talk about these things called positive excellence. Positive excellence is the ability to control emotion. And if we think about we've got a board of directors inside our mind, which is fear and courage. And I always say, fire the fear based directors in your mind and just install courage based directors in your mind. Because without courage, we can't look at this variability and take advantage of it. And one thing that you always say, James, is when the price is coming down, that's when you should be interested, which is absolutely what every professional does. And
Yeah,
that buy on red, sell on green is very, very important. So if we contrast this to the stock market for me is like watching grass grow. It's compared to crypto. So crypto is really, really volatile. And you said, talking about the volatility, it's so substantially less. And Bitcoin is the least volatile. And look at how it's moving around between highs and lows.
yeah.
It's
There,
insane.
there was a spell there where it was like dead. I
Mm,
think October, November, December, Bitcoin was just flatlining.
yeah.
I'd never seen it like that
Oh,
before. But do you believe
yeah, exactly.
as the asset class gets larger, the volatility will wane over time?
Well, that's the focus. That's the focus. All maturing asset classes will get less and less volatile. But the problem is that institutional manipulation could get greater as well. So we see that in the gold market, we see that in silver. So it's the the verdict is open because the answer is, in short, yes, it will get less. But as more and more cryptos are entering the market, well, the individual cryptos could be very, very chaotic as well. And you see that in the stock market all the time.
Okay, I see something here. These look like candlesticks to me, and I remember it was probably a year ago. You said candlesticks don't work in crypto, but these aren't. These are your candlesticks, aren't they? Or
No, this is just Bitcoin's price action per month.
yeah,
So what actually occurs if we think about the research that's been done by academics on candlestick pattern analysis, it plays out about 50% of the time.
okay,
So if you've got a whatever, just pick a pattern, any pattern, the probability of it playing out is probably about 50%. And when we look through the market, if we look at any particular candlestick pattern analysis, you typically find that it's more related to the bands of algorithmic smart money buy and sell levels rather than the actual specific candlestick. So what I did was to develop what's called the CTKS method. And I just put this thing together. So it's a standards-based process, which means you can learn it, that reveals all these smart money buy and sell levels. And the concept of that is to help people to look, getting back here, is to look at the market and to say, okay, we're coming up to a heavy sell area for the DXY. And I was watching this as the DXY broke through this. There's open air above this, and that means it's going to go up rather quickly. And that's exactly what the DXY did.
Yeah.
But if you have resistance above, the sellers are going to start pushing it down. And we see this. The one thing that I do is that, oh, there you go. This is a sort of a kind of doji and the hammer, but the kind of concept is that it depends on the underpinning objective dynamic market structure. And I mark up all the charts from the inception of price history. The longer the better. So the US 10-year yield is marked up from 1912. So when it gets above a smart money sell area, it's making its way up to the next smart money sell area. And if it displays a thing called negative air, if the sellers are too powerful, it will get pushed down to the next smart money buy area. And we see this happening all the time. The DXY was an incredible, ripping example of that. And we talk about this all the time on the channel. There's structural resistance above, and what are the safety nets below? So when we talk about candlestick pattern analysis, I move beyond that and say what we have are ceilings. So ceilings, but we've got a lot of them. And where do they play out? And we've got safety nets below. And when price goes below a safety net, it's going to come to the next safety net. So actually knowing where they are is incredibly important. And fresh air like this, fresh air gaps get filled. So gaps get filled in the stock market. These gaps get filled in crypto.
That's what I call a
And the
breakout.
other, yeah, it is a breakout,
The
but it
gold,
was a breakout.
yeah. The gold bar is your resistance, and then it just blew through it. Because I have
Yeah,
this other concept I call it tapping on glass. Sometimes it's got to tap on the glass 4 or 5 times, then it'll break, and then it'll just blast off. Similar
absolutely.
here? Yeah.
Yeah, I call cracking the concrete.
Concrete above head. Good stuff. So,
Yeah,
one other thing that's very interesting, I look at too, and just interested in your thoughts. So, for the audience, we know that crypto runs 24/7. That's
yep.
168 hours a week. Stock market's open 32 and a half hours a week. And do you think crypto is more volatile because it never sleeps and sometimes the people are tired and do crazy things? Or
Yes.
it's just a high volatile asset because it's exponential in nature? But do you want to talk to maybe how people should prepare for trading crypto because it is 24/7 and what you advise your community to cope with that because it can be very
Yeah.
stressful to be working
Yes.
24 hours.
Well, it is very stressful. So one thing that I would like to do, always do your three-dimensional risk management because crypto is very volatile. It's a new asset class. That makes it volatile already. The fact that it trades 24 hours a day with varying degrees of liquidity inside different financial markets. Markets come online at different times. So that the gaps between market entry, that also makes it very, very volatile. And the concept is when you do three-dimensional risk management, you always think of the down case first. So just ascribe a percentage to it. And you can zoom out, like if you were, for example, looking at Tesla. So I'll make it more real. And this is on a daily basis. We don't do this generally, James, on the channel, but it's a special for you. When when we look at the overarching structure inside Tesla's market, objective dynamic market structures. So it's marked up from the start of price history. One thing that we don't want to do is to sell at support. If it's coming back into support, we don't want to sell there. We want to sell more at a resistance level.
That's a
And of
216,
course,
216.
Yeah.
up there. Yep. That's
So
in fact that tip is it's so simple, but it's also so brilliant. You like I've seen many cases where people say, "Oh, I'm going to sell at 170 because I know it's going to 152 because a guy on Twitter said it's going to go to 152." They're selling at the
yeah,
bottom. They're doing exactly that, but just having this simple little graphic here. Again, I
mm,
always talk about drawing support and resistance lines, or just pulling in, longer term moving averages, and that'll paint it for you. And that
yeah.
says right there. So basically, for the audience, when you go below that golden support level, that's called a screaming buy in my book, correct?
Well, it depends on so many things. It depends on the strength of the SLs that underline this line. So in the CTKS method, we have SCs. These are called Standfield zones, and the SCs are created from a confluence of SLs, which is Standfield levels. So all the Standfield levels have different levels of strength. One thing that I could show the audience, because I know a lot of people really love Solana. Solana has a heck of a lot of resistance from around that 28.95 level up to about the 32.50 level. In this particular area, Solana is very, very strong algorithmic resistance. And if price gets through that, Solana could pop, absolutely pop. If we think about the DXY, it was coming up to one of these levels. This is on a daily basis, so we're like zooming way, way out. This is the key level for Solana to get through, and when it gets through it, it's going to do really well. But you can expect that this, because so many algorithms will be actually and trying to push the price down around this level, this could be very, very volatile, and it could come up and retrace and then consolidate with power, or it could be shot down and accumulate strength and get shot up again. So just be aware of this. And the Solana support is very, very powerful between these lower levels, around 1290 to around 1450, very, very strong as well. So a lot of people could get freaked out because Solana, if the main markets get hit, could come down and they'll say, oh no, oh no. And they could be actually getting wiped out of the market around here, which is the place to get in.
Yep.
So there's a lot of things to consider. That volatility, use it for your advantage is the key.
Good stuff. Very good information. So in terms of, you showed some very interesting assets and everything else. I'll pop up so people can see us. Let me try figure out how we do that. You can see the man, the myth, the legend all at the same time. But there, I always say, I'm interested in your take on this. It's FA to determine what and TA to determine when. So fundamental analysis to pick your asset. Technical analysis to time your entry and your exits and your hedging positions, etc.
Yeah.
You agree with that?
Oh, utterly, utterly. I maybe I'll show you something. I don't know. Maybe a lot of people don't know this. I don't know if you can see this book, but I wrote a book. This book in 2005, which was in Tangible Finance Standards, and it's all about advances in fundamental analysis and technical analysis. So that was written through Elsevier Science, which is one of the leading academic publishers in the US. I believe in fundamental analysis. There's no question about it. I think it's vitally important. One of the things, 37 years ago, I started my finance degree. So 37 years ago, I did the formal training on how to be a financial advisor and do all of those neat things. But my dad was always a trader, apart from being a high level, he was very high level in the government. Mum was an accountant, so I come from a numbers family. So we were always talking about math, money, and freedom. James, we were talking about you.
my dad,
from
opposite to you, my father was an accountant.
Well,
It's not
very
even funny.
interesting, aren't they?
And to the audience, we spoke offline before, and we couldn't believe all the parallels. Anyway,
Yeah,
I'm glad you said it, because in crypto there's a lot of scam coins. How do you address those with TA? Because the TA
yeah,
doesn't sniff out the scam all the time,
yeah,
or does it?
yeah, correct. I just automatically assume that everything is a scam in crypto until proven otherwise. Just go from that basis. If you don't do that, you're going to get sucked in by people who say this is going to 1000x, million x, and they are preying on people. I don't like it, and our community is very strong on eradicating scammers. And Benny, big shout out to Benny. Benny, you are a legend.
Yes.
Thank you for everything that you do for Twitter, for YouTube. You're a fantastic person. It is not unnoticed what you do.
No, and he's
And
for
just,
everybody. He's amazing. So
yeah, he's awesome. So coming back to your question, fundamental analysis is really important. We look at inside our community, we look at things like volume integrity, because integrity in the volume is very important. A lot of people think that $1 of buying will move market value by $1. That's kind of never been the case ever. And I created some mathematics on volume integrity to show people how to assess. And I've worked with some wonderful people on that as well. So it's very much a question that you should always, maybe could I show you something, James,
yes, sir.
on my screen? Thank you. Okay, so this, can you see it? Yes. Okay, we are live. So the concept is that all traders and investors go through four stages. They go through the panic zone when they enter, they go through the blame zone when they figure out all the promises that they were told, typically by scammers, not by decent people. Decent people will never say you should get 100x on this and it's going to happen overnight. That is rubbish. Run from those people. And then people, when they stay, they, after their diamond hands and they've been through so many losses, they start to learn that there's more to the market. There are all these rules that they need patience, they need probability, they need to look at three-way decision making, they need to understand percentages and how they work. And then they start to enter a zone where they get that diamond mind. So diamond hands, zone one and zone two, diamond mind, zone three. But that's not really what makes you happy in life. Zone four is what makes you happy, which is getting inner and outer peace and understanding. Like in here, people say, I want a million X return, I want it tomorrow. And that's fair. People start from that perspective. But the issue is, as soon as you get the Lambo, and that's what people want, well, that's what they want in a bull run, they just want to survive in a bear run. But when they think about, okay, I want the Lamborghini, I want the 1000X. Okay, I would say, what's the next thing? Where do you put that Lamborghini? And they say, oh, okay, I put it in my garage. Does your garage suit a Lamborghini? And all of a sudden it's, oh no, I need to move to a bigger house, I need to move to a better place, I need to house my Lamborghini. So your costs all exponentially rise, and they rise and rise. And as you get more and more wealthy, you start to understand that money is not the answer. It's important, vitally important. But the concept is that we need to push money down to a lower level of focus and put our persistence, commitment, and learning up to a higher level of focus, and have our gratitude and happiness every day. There's so many people that go through so many problems. They get all these life pullbacks. They deal with sickness. They deal with loss of loved ones and separation from family and horrible diagnoses and all sorts of things. You're getting set up for the next life rally. So when we talk about fundamental analysis, it is very vitally important. And it's also important to have the psychological edge, look into the FA, look into the TA, and look into the emotional side of it as well. There's so many things that you need to do. You need to pull lots and lots of things together to survive this kind of volatility and to prosper through it.
Yeah, it's so true. I couldn't imagine I always say, if you're not in the right frame of mind, step away from the computer. Don't even think about trading. You got to be
Yeah,
in your own little zen mind. So that's very well said. And then, of course, the exponentiality of buying the Lambo. Buying the Lambo might be the easy part, but it's all the other stuff that
yeah,
comes along with it. It's very complicated. It's like buying
yeah,
a boat. The
yeah.
cheapest part of boat ownership is buying the boat, and all the damage comes
I
later.
know,
It's it's really ridiculous. So it's great insights here
definitely.
as well. Let's chat a few more questions. I want to make sure that we do cover off on. Let's get back to spend a lot of time on the mentality, which is so important. A little bit of TA stuff. Are there any technical indicators that are best for buying bottoms other than your lines? Is there anything especially you look at?
Yeah. Well, if we look, there are always a lot of technical analysis indicators out there. I I created this thing called deep value analysis. If you would like to share the screen,
Yep.
James. Yes, we're on again. So this particular one is I'm going to be releasing this to the community. The concept is there's always an area where deep value occurs. And when we go below deep value, especially in recessions, this climactic cutoff between the medium and the lower deep value band explains to us that there's a climactic sell-off, and that was COVID. If we get to deep value areas, it's the time to step in and use whatever indicator suits your purpose. So there's so many of them. I actually develop all my own indicators. I don't really subscribe to much more than the RSI. The RSI is pretty good, and I come from a background of lecturing in first and second year statistics, and I started doing that in around 1987. So I tend to, like yourself, James, I tend to crunch the numbers. And when you get into these recessionary periods, yes, price may reduce, but look at all these advantages. There's so many advantages. And if you take that up and you hodl, yeah, you're going to do well. You don't have to wait for it to just retrace and then get back in. So from a concept of TA, there are a lot of indicators out there that are really useful. And if you find anything that is useful to you, you should just use it and just test it and run with it and see how it helps you.
Excellent. Very good. So, in terms of, I know you did show one stock chart there, but
Yeah.
are there any particular crypto day trading tips? We've got some day traders here in the community that would like to know, and even some scalpers as well. Do you have any tips for them as to how that would differ? Imagine you
Yeah.
take a scalper from the equity world,
Mhm.
which I used to be a long time ago. But back then, back in the 90s, it was very difficult to have the machinery to be able to scalp.
Yeah.
Like where you got level 2 quotes, it was like game
Yeah.
changing. But then
Yeah.
it's so much more advanced
They were
nowadays.
awesome.
But anything you'd recommend here for somebody who is, say, an equity day trader or scalper coming to crypto? Any particular TA tools that you would recommend or methodologies that you find work for
I
you?
I think I think James, there are so many fantastic indicators that you have. People should definitely try them out and use them, and anything that helps you is good. It's literally that kind of market. There's so many. I call it the facets on a diamond. It's a big diamond, and any facet that assists you is really good. One thing that I always say to my beloved community, and there's such wonderful people, and it's such an honor to be on your channel, and so many people in your community are a part of our community, and it's just beautiful. One one thing that we do is that we drill in on a daily basis to see how these smart money sell levels and buy levels are interacting with each other. Now, I just picked gold, but it's not the chart because all charts are alive. They have their personality, but they will always obey ceilings and floors. If you can't get through the ceiling, it's like charts throw a bit of a hissy fit and they say, well, I'm going back to the floor. If I can't get through the ceiling, I'm going back to the floor. And if they pound enough, they fall through the floor. And these safety nets are what you want to look at on a lower time basis if you're day trading or anything like that, especially inside crypto. Crypto is so incredibly volatile. If you transfer methodologies from the stock market, you will typically get slaughtered because the nature of crypto is that the volatility is crazy, and you'll find that the intraday volatility will take out your stops.
Mm.
This is one of the reasons that we don't go inside our beloved family. We don't go into leverage. We just buy long at spot, because that's not a bad way. It's a skillful way to make money inside the market, and it doesn't subject people to a lot of risk. And when they're better, when they've got the knowledge, people can do whatever they like. Some people like extreme sports. I can't see myself bungee jumping off a bridge anytime soon. So everybody's different. But
Yeah.
when it comes to support and resistance, know what it is. Know where the safety nets are on what you're trading, because if you don't, you're likely to fall through it.
Interesting one here on gold. Last week or 2 weeks ago, I heard a rumor that JP Morgan was short about 2.2, $2.1 trillion,
Mm.
basically the market cap of JP Morgan. And if gold went above $2,300, it would ignite. It would destroy JP Morgan. They get
Yeah.
wrecked. Do you ever
Yeah.
hear about that? And gold is very manipulated. How does that impact the charts here?
Well, the interesting thing is, if we look at the long-term structure, so this is from 1833. I believe what the institutions do, the focus of this, the institutions know the confluence of the strength of resistance lines, and they didn't go short for no reason. If we go back, JP Morgan was doing its fun and games. They knew it wasn't getting through this structural smart
Yeah.
money sell area above
Yeah.
2020. And when you get that negative air and retest, it's almost a confirmation. This negative air is confirming the next level down. And when people go in with a lot of money, the amount of money that you make is unbelievable. Unbelievable. Like you said before, right at the start, pull money out of the market, 500, whatever you want. Yes, you can. You can pull out whatever you want, but you've got to be aware of the risk. You've got to think about, it's not like a job. It's not a sure thing. It's kind of more like a restaurant. You might have, a lull in the week, and then you party on Friday and Saturday night. So things things like that. But still, from 1833, the institutions use this confluence of strong resistance, all the ceilings that are actually pulling in to the chart, and they manipulate it from there. This is what they do. So that's why you need to know what the institutions know. You need to know what the algorithms know, and
Exactly.
that's what this method is all about. So that's, I think, the difference with this, James, in between sort of other ways of thinking, is you're looking at multiple ceilings up way above the two standard deviation variation around price. And a lot of statistical analysis has been done to say that price basically varies up and down within two standard deviations. So if you think about that, you've got a bit of a band where things will compress and decompress, and when it hits specific levels, that's a sign that there's a sort of a 95 point whatever percent chance that it's going to reverse or consolidate. And it's probably about that time that you would consider scaling out. And when it hits the lower band, you would consider scaling in. So you're buying on red and you're selling on green. So from that perspective, that's really important to also understand. I just wanted to share that little one.
Yeah, it's very cool. One of the things as well that I was probably wasn't perfect at in the last cycle, because we all thought we were going higher. I
Yeah, we
started
did.
a series. It's so funny. I started a series in September 2021. It was called Should I Sell? And it was about layering out and identifying layers at which to sell at, and how much portion
Beautiful.
of your bag you sell and take profit. Because that's an
Yeah.
area where, people sometimes get married to their assets, tokens, or whatever, or
Yeah.
they don't think of oh, I don't want to sell it because it might go to that 1000x or whatever. So there's
Yeah.
all this emotional stuff. But how do you recommend to your community that they should take profits? And is it in terms of layers, or is it just you buy at this level, you sell at this level, or is it staggered?
Yeah. Thank you, James. If I share this chart, I think this chart sells so many things. If you think about the intra volatility of any particular asset class, in this particular case, we had a sell down by nearly 45%. When you look at the structural levels underneath Bitcoin, you need to know those things. And when you get out, it's all about an understanding of where the structure impacts the price and what happens. If we look at that particular sell down, this particular sell down, you always have these black swans in the market. We have plenty of them.
Are those
Plenty.
lightning strikes, by the way, just from my
Yeah,
edification? Okay.
yeah, they are lightning strikes. Boom.
I
They're
call it a
just
kick in the
hurting
teeth.
price.
Yes.
So what I always suggest, I have a very specific methodology. If I can find it, where is it? Here. One always get your foundations in play. Then look at the market through the lens of the macro, and look at the also look at you need to look at the fundamentals. It's you don't close your mind on anything. Be always open-minded. Find the market's focus, understanding how your pattern recognition is actually playing in. Before you buy and sell, always have that mastery of emotional control. So if you don't master emotional control, what you will find is that nearly these volatility, this inherent volatility will shake you out.
Yep.
Go in at layers and levels and come out at layers and levels, and
Exactly.
always be aware of what the market is doing. Don't just corridor yourself so much into one particular method of thought that you don't do your three-dimensional risk management, because it's very hard to get around that. But it's just something that we learn
Yep.
being inside the market for a long time.
Never go broke taking profits, as I say, and don't be
Oh,
afraid to
beautiful, James.
come off the table.
Yeah, yeah,
I remember,
correct.
well, I won't talk about my old gambling days. The world is now. But I'll do a quick story. I used to play a lot of craps in the 90s. I used to love it. I used to fly to Vegas at the weekends, play craps just to unwind. And that's all I did. But I'd only risk 300 to $500 a day. So if I'm gambling for 3 nights, $1,500 budget. If I blow my 500 in the first night, I walk away. That's it. Game over. Next day I come back with
Professional.
500. If that becomes 2,500, that 500 goes back in my back pocket, and I play very aggressively at the table's money. And the same type of thing works actually with the markets as well. But if the mood isn't right, if the timing's not right, step away from the table, ladies and gentlemen. So let's see what else we got. Do you
Can I
believe?
just say something,
Yeah.
James, on that? What you said? That is probably one of the best ways that you could ever think about anything. When you go into the market, think about what you're prepared to lose. So
Yep.
that's what you did in Vegas. You said, I've my I've got my level. I'm going to obey my position sizing. No wonder you're such a good investor and trader. It all makes sense.
Started
You look at that and you say, I'm not violating that. I'm going to take that level. You and I are so similar. I can't believe it. I used to do exactly the same thing. I would have my position. If it wiped out, I would walk away.
Yep.
It takes a lot of discipline to do.
Oh yeah.
It's
Because you think
beautiful.
maybe the next roll of the dice will be a game changer, but no, you got to be ruthlessly disciplined, and that's probably a key
Exactly.
lesson here. And one of the questions that people always have is, I always say, I do believe if you apply the discipline and you really focus on your craft, I think anybody can be successful at this game.
Yeah.
I'm wondering what your take is on that. Can everybody be
Oh,
successful at trading and investing? I also always warn it's a blood sport. It's a zero sum game. It's you against whoever's behind that wall that you don't know who it is.
yeah.
And sometimes people think, oh, I'm trading against the stock market. No, you're trading against another individual who's taking the other side of the bet against you. And people don't, when they notice somebody behind the wall, maybe they'll be more afraid and they'll sharpen their tools even more when they go into combat, as it were. What would you say to the audience?
Well, of course, the nature of the market is that it pays you for synchronization. It pays you for your knowledge. It pays you for your emotional mastery, your ability to analyze. And like you say, you're going up against very, very intelligent people. People in finance are amongst the smartest people in the world. They really know their stuff. They crunch numbers, they do analysis, they put probabilities together. And when people just take it, oh, this is kind of like a casino. I'm going to pop in and that coin. Somebody told me on Twitter that it's going to go up 5,000% today, or it's a sure thing. It's guaranteed. Oh my goodness! When I hear guaranteed, my skin crawls. Oh, I've got guaranteed profits. No, you don't run. You don't have anything guaranteed in this world. You must, like you say, James, you must be committed, you must be disciplined, you must be persistent, you must learn all the time. And I don't get this, but this is something that I see a lot of. Anybody who has ever been successful at anything has been persistent.
Yep.
They stick with it no matter what. They don't want to do it, they do it. They're not well, they do it. They should not be doing it, they do it. Whatever it is. All the greatest tennis players are like that. They're so dedicated and committed, and they do it always. Athletes, sportsmen, sportswomen, this is the way in life. Everything that is earned in this world, you have to work hard to get it.
Yep.
Anybody can be successful in financial markets if you put in the work. The only question you ever have to ask, just personally, is, am I prepared to put in the work?
Exactly.
And that's not just in the markets, that's in, am I prepared to put in the work in my relationship? Am I prepared to put in the work in my job? Am I prepared to put in my work for my financial future? If the answer is yes, you have a beautiful life. Beautiful. Yes. Because you're disciplined, and discipline is freedom.
You got to outwork and outsmart your opponent and have the right weapons or tools or whatever you want to call them. I think we've spoken too much about war during this show. Okay, so wrapping up here, a lot of people, including myself, think we're in a technical recession, but recessions are hard to measure these days because government statistics are a little bit different. The prices, the whole inflationary world we just went through because of money printing, has brought prices up, which actually increases revenue and sometimes profits for companies. So some of the stock market returns, everybody's like, oh my God, Q1 returns for the S&P 500 were 92% better than expectations. What's wrong? Inflation. But what's your take on whether or not we are in a recession currently? And I'm sure, they always say that if the US coughs, the rest of the world gets a cold. But there are certain climates around the world where, Australia can be dependent on other types of natural resources for their economy and working with other business partners. But how do you see the world today? Is it going into a recession? Europe thought they were going to go into a terrible recession. Looks like they might just escape it. What's your take?
Okay. Maybe I can show you something. I put this one together because I wanted to show people, when you talk about a recession, governments retroactively apply the concept of a recession. They say, oh, when price is selling down, we weren't in a recession. And then after the government said, oh, we're in a recession now. Notice what actually happens when you go below that sort of deep value band, that climactic sell-off.
I've been telling people about this as well. Because the market is far out of the time, has far rebounded before the world even has been in a recession. That's just the history.
Absolutely. Yeah. And look at this, James. Does this look recessionary?
Nope. Yeah. That's why everybody is scratching their heads. All the world-class, macroeconomists and the all the experts from Wall Street, they can't fathom what's going on now. But you also have to look at the fundamentals behind that S&P spike there. It's 500 companies, but that spike is all driven by 7 names. And that's what people
Correct.
forget,
Correct. It's concentrated.
Yeah.
Yeah, that large degree of correlation, well, large degree of concentration is a bit of a problem, because if the smaller firms aren't participating in that, it could be a topping signal. Now, if it is, it will show up in actual price action. So one of the things we always talk about is, what is current price doing? Is it breaking below that deep value area? No, it's not. It's not breaking below. What is it actually doing? It's pulling itself above. So
Yep.
from that perspective, are we in a recession? If we look at, maybe I could just take you through past recessions here, James.
As I lived through them
So
all. We can
yes,
we can go back to the late 80s. We can do the dot-com bust. We can do the GFC, all that fun stuff.
look at this difference.
Yeah.
Look, it's coming down. I got a little screenshot there for you to say this is current price action. Does it look like this in .com? No.
Dot-com is
Does it look the same?
Yes. The market was so overheated. And that's why people, when they try to build corollaries, you got to look at the fundamentals back in that time, because, you had
Correct.
stodgy companies, as I'd call them, trading at a PE of 150 and 200, which just made no sense. Now you've got extremely fast-growing companies trading at a PE of 20, which is fairly valued. So that's the big difference between that point in time and the GFC. That was triggered by, of course, craziness in lending and real estate. We don't have those similar type of problems now at all.
Yeah.
So, excellent.
Yeah. So the answer to your question, in short, they don't worry about recessions, depressions. They're always part. Every real professional looks at the market and says, you can't escape it. Don't worry about it. Take advantage of it.
Yep, exactly. And by the time the government tells you we're in a recession, the markets are way out of it, literally way out. And also what they'll do once they find out they'll cut rates and they'll print a ton of money. And that will turn what's already way out of the bottom even higher, like rocket propelled acceleration to an even higher level. So it's been a great session. I see the whole CTKS army out there, all your ambassadors.
Really?
And you've got an amazing backstory. You and I have so much in common. They want us to do this again. They loved it. By the way, how do people learn about you and your masterclass and your hundreds of videos? I've been watching you for a long time. We have a lot of people in common that talk about you all the time. So where can they get more information if they want to learn more about CTKS and all the goodness you have to offer? And again, the most important thing about Ken, your approach, is the psychology.
If they want to learn about the masterclass, they can go to cryptotechnicalanalysis.org, and please just pop across and say hello to the family. You're very, very welcome. And the other one is the CTKSmethod.org, where I mark up the charts. So if people are interested in understanding what the monthly levels are, because objective dynamic market structure does change every month. So that's something to be very, very aware of. It's just not static. They can learn about that and just come and say hi on Twitter anytime. And in YouTube, we have a beautiful global family. And of course, thank you again to Beardy, and thank you to Tails, just two people and so many others. Yeah.
I know where Des lives. He might as well just stay up all night and just have a coffee. It's so late.
Oh, poor Des. I'm so sorry for keeping you up, my friend.
This has been great. I really appreciate your time. Thank you so much, Ken.
Thank you.
Audience loved you. And so much learnings. And what I'd like to do is actually, maybe when we do our next visit, we can mash up some of our indicators. We'll do some prep in advance. That would be awesome.
Yeah. Okay.
I believe a lot in synergy. 1 + 1 = 5, or even 10, or a lot more. And then we can provide the community here with even more tools to beat Wall
Yeah,
Street. Wall Street's not our friend.
lovely. And I would love to have you on our channel too, James, and you can talk about fundamental analysis and
Yeah,
how it impacts things. Any edge that people can get is always a good edge. That's the beautiful thing in finance, beautiful thing in markets. Any advantage is just a benefit. So, yeah, that would be very nice as well.
exactly. Well, wonderful. Next time we will figure out the gremlins ahead of time too, so we don't have those.
And sorry everybody for that. I'm a complete newbie. This is my first time on camera in nearly 900 videos on the Crypto Trading KS channel on YouTube.
Well, we are.
Whoa.
It is over 1,000 people watching live, and they loved every minute of it,
Oh,
and they love seeing you
thank
too.
you, everyone.
So thank you so much. Have a great
Thank you,
weekend,
James.
Ken. We'll be in touch real soon. And a big thank you to everybody in the audience. We don't even need moderators here. Everybody's so kind and gracious.
Oh,
My
beautiful.
two mods are away right now, but I told them before. I said, no, Ken has a great community, and you got a great community, so you don't have to worry about scammers. So
Yeah,
we are safe today.
awesome.
Thank you so much. Thank you,
Thank you,
Cyberjuice
James.
Tiger, as well. Ping me in Discourse. I'll give you a rundown of some pre-checks for video. Yeah, I'm the worst guy at pre-checks because I run from one thing to another. I'm always late. But thank you, Cyberjuice Tiger. We'll ping you in Discourse. Thank you so much again, Ken. Have a good night, everybody.
Thank you,
See you
James.
all soon.
Thanks, everyone.
Bye.
Bye.